Do you want to build wealth but don't know where to start? Welcome everyone to an enlightening journey that will help you tap into the secrets of wealth creation. We're about to embark on an expedition through the terrain of personal finance, where the goal is not just to accumulate wealth, but to understand how to make it work for us. In this journey, we'll be exploring 5 essential steps to build wealth. These are not just steps, but rather pillars that will support your financial structure. We'll start with understanding your finances because knowledge is the first step to power. Next is saving, the cornerstone of wealth building. Then we'll venture into the exciting world of investing, followed by diversifying because, as they say, don't put all your eggs in one basket. And finally, continual learning, because the financial world is ever-changing and staying updated is key. Unlocking your financial potential might seem daunting, but with these 5 steps, you're on your way to a wealthier future. The first step to wealth building begins with understanding your finances. Now imagine your finances as a flowing river. The water flowing in represents your income, and the various streams flowing out represent your expenses. You must first learn how to control this flow if you want to build a reservoir, your wealth. So, how do you control this flow? The answer is simple: by knowing where your money is going. This is where the concept of budgeting comes into play. A budget is like a roadmap for your money. It helps you understand your income, manage your expenses, and allocate funds towards your financial goals. It's like having a financial GPS guiding you towards wealth accumulation. But what if you're already in debt? Don't fret. Managing debts is an integral part of understanding your finances. It might seem daunting, but remember, every mountain is climbed step by step. Start by listing all your debts, understanding their interest rates, and creating a plan to pay them off systematically. It's like trimming the excess branches of a tree to help it grow better. Now, some of you might wonder, why is understanding your finances so crucial? Well, consider this. If you're on a journey, wouldn't you want to know your starting point? Similarly, financial awareness acts as your starting point in the journey of wealth building. It helps you identify your financial strengths and weaknesses, understand your spending habits, and plan your wealth building strategies. So, to sum up, understanding your finances involves 3 key steps: knowing where your money is going, creating a budget, and managing debts. It's like laying the foundation of a building. The stronger the foundation, the taller the building can be. And in this case, the building is your wealth. Remember, wealth building starts with a clear understanding of your financial picture. So start today. Take charge of your finances. Understand them, manage them, and watch your wealth grow. Now that you have a handle on your finances, the next step is to start saving. You see, the cornerstone of building wealth lies in a very simple principle: spend less than you earn. The difference, my friends, is what we refer to as savings. Let's delve into the importance of saving. When you save, you are essentially setting aside money for future use. This could be for a significant purchase, an unexpected emergency, or your ultimate goal: building wealth. By saving, you're giving yourself a financial buffer. And in the process, you're taking the first step towards financial independence. So, how do you save effectively? One of the best strategies to employ is setting savings goals. Having a clear goal in mind gives your saving efforts a purpose. For instance, you might want to save for a down payment on a house, for your retirement, or even for that dream vacation. Knowing what you're saving for can motivate you to stay the course. Another effective strategy is automating your savings. This is a game changer. Set up an automatic transfer from your checking account to your savings account each month. By making savings automatic, you eliminate the temptation to spend that money on non-essential items. And speaking of non-essential items, another key to effective saving is cutting unnecessary expenses. This doesn't mean you have to live a life devoid of fun. It simply means becoming more mindful of where your money is going. Maybe it's the daily gourmet coffee, or perhaps it's that gym membership you never use. Identifying and eliminating these expenses can significantly bolster your savings. Remember, every dollar saved is a dollar that can be invested towards building your wealth. It's not about depriving yourself, it's about making conscious decisions and prioritizing your financial future. Building wealth is not about how much you earn, but how much you save and keep. So, take the leap, start saving, and watch as your wealth begins to grow. With savings in place, it's time to make your money work for you. Enter the world of investing. Investing is essentially the act of committing money or capital to an endeavor with the expectation of obtaining an additional income or profit. It's not just about stashing your money away, but rather putting it into channels that have the potential to earn strong rates of return. If done correctly, investing can be a powerful tool to grow your wealth over time. Now you might be wondering, where can I invest? There are tons of options out there. Let's talk about a few. First up, we have stocks. When you buy stocks, you're buying a piece of ownership in a company. As the company grows and becomes more profitable, so does your investment. But remember, the value of stocks can also decrease, so there's a certain level of risk involved. Next, let's consider bonds. When you buy a bond, you're essentially lending your money to a company or government. In return, they agree to give you interest on your money and eventually pay you back the amount you lent them. Bonds are generally considered less risky than stocks, but the potential for high returns is also less. Real estate is another popular investment choice. This could mean buying a property and renting it out, or it could mean investing in a real estate investment trust, or REIT. Real estate can provide a steady income stream and potential tax benefits, but like all investments, it's not without its risks. There are other investment options out there, like mutual funds, ETFs, and even commodities like gold or oil. The key is to research and understand what you're investing in. It's also crucial to assess your risk tolerance and investment goals. So, how can investing grow your wealth over time? Well, thanks to the magic of compound interest, the money you invest earns returns, and then those returns earn returns, and so on. Over time, this can lead to exponential growth of your initial investment. Remember, investing is a marathon, not a sprint. Patience indeed pays off. It's about long-term growth, not getting rich quick, so start investing now and let your money do the hard work for you. You've started investing, but how do you protect your wealth? The answer is diversification. Let's break it down. Picture a plate of food. If you only put potatoes on your plate, you might get full, but you'll miss out on essential nutrients. Just like you need a balanced diet for good health, you need a balanced portfolio for financial health. This balance is what we call diversification. Diversification is the practice of spreading your investments across different asset classes to reduce risk. Think of it this way: you don't want to put all your eggs in one basket. If that basket falls, all your eggs break. But if you spread your eggs across different baskets, the risk of losing all your eggs at once decreases significantly. Now, these baskets represent different asset classes. These can include stocks, bonds, real estate, commodities, and even cash. Each asset class has its own set of risks and rewards. By investing in a mix of these asset classes, you can potentially increase your overall return while reducing your risk. For instance, while stocks may offer high potential returns, they also carry high risk. On the other hand, bonds are generally safer but offer lower returns. Real estate can provide stable returns and act as a hedge against inflation, while commodities like gold can offer protection in times of economic uncertainty. Cash, though it doesn't grow much, can be a safe haven in volatile markets. By diversifying, you're not just relying on a single asset class to perform well. If one of your investments doesn't do well, others might. This balance can help stabilize your portfolio over time, smoothing out the ups and downs of market cycles. However, diversification isn't a one-size-fits-all strategy. It depends on your individual financial goals, risk tolerance, and investment timeline. It's crucial to have a clear understanding of these factors and to regularly adjust your portfolio as needed. Diversification isn't just about having different investments, it's about reducing risk and maximizing your wealth potential. To sum it up, diversification is like a financial safety net. It won't guarantee profits or protect against all losses, but it can help you build and protect your wealth in the long run. The final step to building wealth is continual learning. This is a crucial element that cannot be overstated. Why? Because the world of finance, just like our world, is always changing. New investment opportunities emerge, financial markets fluctuate, and economic conditions vary. The only way to stay ahead and make informed decisions is by keeping yourself updated with financial news and trends. But continual learning goes beyond just staying updated. It involves learning new investment strategies and not being afraid to venture into unfamiliar territories. It's about embracing change and continually adapting your financial plan. Remember, your financial journey is unique to you, and it's okay to tweak your plan as you learn and grow. In a nutshell, continual learning is the fuel that will keep your wealth-building engine running. It's what separates the successful from the rest. So, never stop learning, because as the saying goes, knowledge is power, and in our case, knowledge is wealth. Remember, the more you learn, the more you earn. So there you have it, the 5 essential steps to start building wealth. Understand your finances, save diligently, invest wisely, diversify your portfolio, and never stop learning. It's time to take action. Don't forget to like, comment, share, and subscribe. Here's to your wealth building journey.